Okay, good morning and happy Tuesday, aka Taco Tuesday. Hopefully everyone's going to be enjoying some lovely and delicious tacos. I'm actually going to be having some chicken tacos today. If you have not made shrimp scampi tacos, definitely give it a whirl. It is utterly amazing. I mean, who doesn't love seafood, right? Okay, well, if you're a vegan, obviously you don't love seafood. Vegetarians, I'm pretty sure, eat like seafood. Don't quote me on that. I know it's very different. I myself, I'm very much a carnivore, so very much love my seafood, meat in general. Hopefully everyone's having a great day. Today is going to be an action-packed video, so if you are new, welcome. This is definitely going to be an interesting video, especially if you randomly clicked on this one. Today I'm going to be talking about a loss that I ended up taking in my public account, also my private account as well too. I'm also doing a public account challenge on YouTube for motivation purposes and education, especially for very much young investors, young traders. I've been in the market now for 6+ years, and I obviously have not been in the market as long as some people, but I've been in the market longer than probably people that have recently got in the last several years. And when I say I've been in the market, I mean that I have not left the market, okay? There hasn't been a point in time where I've consolidated everything, gave it a salute and just basically pretty much like, said, hey, I don't want to do this. No. I do not believe that is the right thing to do. I believe that is the wrong thing to do. And I want to talk a little bit about that, but I also want to keep this video below maybe 20 minutes here. SoFi. So tomorrow I really want to spend some time just talking about SoFi because the company, phenomenal, great company. They've been releasing phenomenal news that is just setting this company up on a tear once the geopolitical concerns go away entirely. Even though there's a peace deal, but there's still a lot of fears in the Middle East. When that stuff is gone, when oil continues to push down, we need oil to really get very much in the 60s, maybe even below $60. But once rate hikes go away as fears, call me crazy, I don't believe that we're going to be getting the rate hikes like the market's going to price in. Bank of America and JPM, they are bears, okay? Bank of America and JPM, it's pretty much like, and this is one of the problems with our planet. People are misled. I've been misled many times before in my life. I'm actually turning 38 in 2 days, June 25th. I post videos on this YouTube channel Monday through Friday, sometimes a Saturday. I'm actually going on vacation starting on my birthday, Thursday. I'm going to be gone until Tuesday of next week. So there won't be any videos Thursday, Friday, and also Monday next week. But I've been posting a tremendous amount of videos in the last 8 months, and this YouTube channel is fairly new, so if you enjoy my content, definitely drop a like, subscribe. My main YouTube channel is a video game channel with 200,000 plus subscribers. My video gaming viewers don't really want anything to but that's how you know it is time to really be buying stock, because when everyone is just so sick and tired of the stock market and nobody wants anything to do with the stock market, that's when you buy stock, okay? So please take that with a grain of salt. But otherwise, I myself have very much been misled in life, and I really try not to mislead people. I am a American bull. I'm a patriot, a veteran. I love my country. I am very much long-term bullish on the stock market. If you asked me over a month ago, I would say I was short-term bearish, but now I'm very much short-term neutral. But regardless if I'm short-term bullish, short-term neutral, or bearish, I'm still going to be buying stock because you got to be in the market regardless. There's always discounts left and right. And right now, there's discounts everywhere, okay? So understand that. Bank of America, BOA, the competitor to SoFi, and JPM, the competitor to SoFi, they are bears. And Bank of America and JPM is saying that we're going to be getting multiple rate hikes this year. They are bears on the economy. They are bears on SoFi. They are bears on crypto. They're just bears in general, okay? Why is that? Because they're friggin' banks. They want you to keep your money in their system, okay? Banks tend to be bearish. SoFi is an outlier, and I really want to talk about more of that tomorrow. So if you do love SoFi as much as me, I'm very much a long-term investor in SoFi. Very much forward-looking, like a decade of SoFi. Other positions that I own, very different. So today, I ended up doing some rebalancing of my profile. Ended up taking a loss. And if you've been following me for a while, or following me in the last several weeks, I've been talking about this. So I ended up taking a loss on Adobe. I had a $6,000 position size of Adobe. Ended up taking close to about a $2,000 loss. Call it even about $2,000 of a loss. And you gotta know when to really pull the trigger, okay, for a loss. If you are a disciplined investor, disciplined trader, you gotta know when to take a loss, and you gotta know when your strategy has very much turned upside down. So why did I get into Adobe stock? I started buying Adobe pretty much when software stocks started to really dip down. And as the SaaS apocalypse pretty much played out, I started to really buy heavier into Adobe. I chose to buy heavier into Adobe more so than ServiceNow. CRM, Salesforce, I don't have any exposure to. But I chose Adobe because, one, their year over year is very solid, 14% for a compound annual growth rate, CAGR. You got a CEO that is just, been with the company for a very long time. And it's like, hey, I started to listen to their earnings call before I even bought in. And I'm like, hey, I like this management team, right? Well, guess what ended up happening? Out of the blue, actually, let me talk about the stock price first. So for Adobe, pretty much the stock price on Adobe very much fell off a cliff. I started to very much get into Adobe during very much, I believe the first shares that I got was honestly around 300 or slightly below. And I was actually up on my position during this time because I was very much dollar cost averaging during the month of February. And the stock ended up pushing up, and then the stock just continued falling down. Ultimately, what ended up happening was Black Friday last year was a banger. Adobe had record-breaking sales. I use Adobe products every day, and it just felt like a great buy, right? I very much had a price target on a bullish case as high as 600. Base case was very much in the 5s, and bear case, obviously very much higher than where it is right now. But realistically, something fundamentally changed. You got to remember that if you're going to be a long-term investor in the stock. I'm not a financial advisor, but when it comes to making a strategy, you don't need to be a financial advisor to tell someone common sense. If you develop a strategy, okay, and if there is a internal problem that happens, the CEO is randomly stepping down. Then, out of the blue, the CFO is stepping down as well, too. As the stock price continues to go down, hey, I really liked the old management team, and you want to know what? I don't want to stick around for this new management team. this stock may even go very much lower than it really is. Is it getting to a point where the fundamentals are honestly undervalued? To be perfectly honest, not yet. This stock could very much fall to the 160s, 150s. You're talking we are now trading at levels of back in 2018. But I mean, theoretically, we could very well, there's nothing stopping this stock going down to the 150s, 160s. There is a lot of drama within the company now. Not to mention the company itself, they don't give out dividends. I myself, I'm very much a growth investor, so I really wasn't looking for a dividend play on this one. Nor do I, really care per se about dividends on Adobe. But a lot of long-term investors in Adobe that have been in the stock for like maybe the last decade, they're very much calling the ship, because you gotta remember that there are investors in Adobe that have very much endured probably this drawdown all the way during 2022, and they probably got out maybe during 2023, maybe even 2024 or 25. But there are people that probably bought into Adobe when it really started spicing up around 2016, 17, and just very, very much just a solid trajectory upward. And the thing about Adobe is that I just really don't want to stick around for the long haul, and I can really see my capital going to like other good locations. So what did I end up doing with my capital? So I ended up buying more Palantir. Palantir right now is very much a buy because the fundamentals have very much caught up. Call me crazy and call Alex crazy as well, but their growth rates, they're something that the market has not really experienced. It's freaking out a lot of people, but right now, the fundamentals on Palantir has very much caught up. Now I've been in and out of Palantir since the stock was in the teens. I have made a very much decent amount of money. I have very much traded Palantir. I never took a long position. I honestly wish I did, but I had a trader's strategy, which I did execute. Not gonna lie. I traded Palantir multiple times and made multiple 100% profit gainers. But at the same time, I ended up picking up some shares of Palantir here. I do see Palantir continuing to grow. And the reason being is because their business model is very much just targeting a very new sector. And yes, Palantir will eventually get back to all-time highs in a very, very much risk-on market. ServiceNow, I ended up buying into because obviously I do want more exposure to software companies. But at the same time, ServiceNow, their CEO, their CEO did actually go on. What's his name? Hold on one second. I believe his. Oh man, I dropped the ball on this one. I completely did. Hold on one second. I think his last name, yeah, McDermott. William McDermott. This guy was pretty much on CNBC after their earnings, defending his stock because his stock was down by double digits. I believe it was down by 12%. And he basically came out and said, hey, look, you do understand that we pretty much did an acquisition within the last year, which ServiceNow did. And on top of it, too, a lot of times when you have companies, especially software companies, okay, software companies doing acquisitions, it takes a little bit for their balance sheet to very much level out. So obviously ServiceNow, I was actually up by, I think about 40% in the last couple weeks, beginning of June. And the stock has very much returned to the levels of where I started pretty much buying shares at. So I ended up increasing my position. If ServiceNow honestly really stays where it really is, I'll probably increase my position more. Now, with ServiceNow, why do I see such a big difference than Adobe? Because one, their management team is not jumping off the friggin' ship. Okay, let's face reality. Secondly, the thing about ServiceNow is they're actually doing a lot more integration of AI into their business model. So I very much see ServiceNow very much not having a scary atmosphere, kind of like Adobe and maybe even like Salesforce in a way. I could be totally wrong about Salesforce. Salesforce could be the winner chicken dinner. I honestly could be totally wrong about Adobe. I could be totally be wrong about ServiceNow. You know, time will tell. I actually did just open a new position, Coinbase. And I actually just bought crypto for the first time in friggin' oh boy, when did the last time I had exposure to crypto? 2021. Oh yes, it's been a while. It definitely has been a while. So, public account. Like you said, I'm doing a public account challenge to 6 figures. Looking to take this sum of money here to 6 figures in the course of 17 months. The account challenge started 2 January this year. It was 18 months, but at the same time, I've been overly depositing a lot of money into this account. I've had to lower the account challenge because the market's been falling off in the last 6 months. If you have capital sitting on the sidelines, you would be, I gotta say this lightly, but at the same time, not really. You would be a dumbass if you're not taking advantage, okay? 8, 9, 10 months ago, I was very underinvested in the stock market. I started to really buy stock very heavily 7, 6, 5, 4 months ago. And the reason being is because last year during Liberation Day, I went all in the market. And I use that word lightly. When I say all in, I mean I depleted my checkings and my savings account. I went all into the market. I bought over $100,000 of hard stock, cash money, not a margin. Depleted all of my cash because the major indexes were down 30%-ish, and you had stocks. Stocks were crashing. Nobody wanted stocks. It was a full-blown crash, okay? Even though the Trump administration won't call it a crash, it was a fucking crash, okay? I remember last year, and I was buying Palantir on 2 accounts, below 90, 80, at high 70s. Nvidia, I ended up buying below 100. AMD, on my private account, I have shares below $100 that I'm still holding. And during the summertime, I got rid of all my trade positions. My long-term positions I added to, such as SoFi, AMD, I'm obviously holding, Meta, friggin' Nvidia, Palantir, a couple other trade positions that I had, I pretty much got out of summer last year. And I was sitting on a tremendous amount of cash come time October, November, and when the market very much started to dip down, that's when I started to really get back in. So if you are sitting on a tremendous amount of cash, I mean, like me personally, if I was sitting on a tremendous amount of cash, there are deals left and right. Do your due diligence, okay? Do your due diligence. Now, so this account, obviously this account has winner chicken dinners. I took a $2,000 loss. You got to know when to take a loss. If you are a disciplined investor, disciplined trader like myself, you got to know when to take a loss. Okay? 2020, 21 made life-changing money, hundreds and hundreds of thousands of dollars of profits, owed a lot of money to the federal government. 2022 was a gut check, still was profitable. because I really started to learn the psychology and fundamentals of the stock market. 2023, I was in the red. I had more losses than I had profits. I was unprofitable 2023. Why? Because I did not want to take a fucking loss. That's why. Why didn't I want to take a loss? Because every single stock that I bought in 2020 and 21, I made money on. I very much, but then again, why did you make money on any stock you bought? Because the market was just was a circus to the upside. To the upside, it was a loony bin. Very, very much crazy. So, 2022 was a gut check for me, but 23, I really didn't want to take losses. And because of that, I let positions fall to 50, 60%. You got to know when to take a loss, and you got to know when your strategy very much becomes broken. SoFi, if the management team changes course on SoFi in the wrong direction, I'm going to start doing an exit strategy. On my private account, my Robinhood account, I have an average on SoFi of $7.41. I'm holding 1,642 shares. Tens and tens of thousands of dollars I have invested in SoFi. If the management team changes course in the wrong direction, hey, I'm gonna readjust my strategy. So far, the management team, they've changed course in the right direction, which is utterly insane, right? I love management teams that changes course in the right direction. Water, cheers. When you have a management team that changes course in the wrong direction, PayPal is a prime example. You got to know when to take a loss. Now, Palantir, I'm okay with being down because the management team of Palantir, they're phenomenal. And the management team has shocked the market many times. And I believe Palantir is going to go on another tear. Maybe not this year, but probably next year. And Palantir is going to continue to shock people. Meta, I've actually deleveraged myself on Meta on this account. I was actually up on Meta a lot in the last couple months, and then they started spending, and I'm like, hey, let me take some profits. I actually had a position size of Meta a little bit over 4,000. I've actually rolled a lot of that money into AMD, SoFi, Hood, some Adobe as well. So I'm okay being in the red on Meta, Palantir. PayPal, I may take a loss on. But the thing about PayPal is that it's just the company is printing money, and a lot of people really feel that PayPal is going to get bought out. So obviously PayPal, I'm sitting on a loss, not as big as Adobe, but I'm also not as much exposed as I was to Adobe. Now, cryptocurrency, I utterly despise Webull. I honestly may open another Robinhood account and transfer my because Webull is a great account to day trade on. But when it comes to like anything else, it's friggin' annoying. So I was actually on the phone with Webull for about 20 minutes waiting to talk to someone, and I actually could not get someone on the friggin' phone. Imagine if your accounts get hijacked. Yeah, fuck you, Webull. Seriously, your support system is like, if I call Robinhood, they answer the phone like that. Webull, I was waiting for someone for 20 minutes to get on the phone. Then I ended up using Google Gemini, and Gemini actually walked me through my problem. So, I have not bought crypto since 2021. I ended up today, buying, and it's honestly really shitty. My OCD is going to be bonkers because obviously my stock account. So if you have a maybe Robinhood does it differently. Like I said, I haven't owned crypto since 2021. I actually bought Doge back in friggin' 2021 on Robinhood. I don't know if Robinhood combines your account, but now I got like my stocks. So theoretically, this account is 50,000. Do the math. This account is still it's still 53,000 ish in some way. Am I do the math right? Somewhat right. Okay, so why did I buy Ethereum? Yeah, this video is over 20 minutes. I'm sorry, guys. I really am. Why did I buy Ethereum? So, I ended up pulling the trigger on crypto for the first time because... Where are you? Hold on one second. My screen is lagging. There we go. Okay. Several reasons. One, I honestly do want exposure to crypto, and I don't want to overlap. Like, so if you had to if you put a gun to my head, hey, you got to pick between so you got to go over leverage in one area. It can be fintech, semi, staples, or crypto. Which one would you rather be over leveraged in? I would honestly be over leveraged right now in semis because that is where all the money is going. Amazon, Google, Meta, Microsoft, many other companies too, CapEx spending, okay? Until the CapEx spending ends, AMD is going to go on a tear. Nvidia will catch up, but obviously Nvidia is not going to go on a tear like AMD, okay? The stock price of AMD is going to outperform Nvidia's stock price, okay? I'm not saying AMD is going to take over Nvidia. That would be crazy. Imagine if it did. I would definitely make well beyond a $250,000 probably in profits from AMD if AMD did take over Nvidia. That would be friggin' amazing, okay? I would rather be over leveraged in the semis right now than honestly the fintechs, the staple companies, very, very much consumer-driven companies. Celsius is a good example. Hims, Walmart, you know, anything like consumer buying and stuff, right? Cryptocurrency, I want exposure to. And the reason being is because I really feel that we are in a Bitcoin cycle. And I've talked about this before. I talked about how very much Bitcoin, it goes through these cycles. The Bitcoin cycle is 3 years up, 1 year down. We're in that 1 year. 3 years to the upside, 1 to the downside. Now, there are, and I did make a video on this, there are so many crypto bulls. The bulls are even saying this, that crypto is going to Bitcoin's going to 33,000. If Bitcoin goes to $33,000, oh man, I'm not going to be going out and eating some steak for a while, but I'm going to be depleting everything, and I mean, I got to do it. Like, I got to go ahead and buy friggin' Bitcoin, okay? Is there a good chance that Bitcoin is going to break 60,000? Is there a good chance that Bitcoin's going to go down to 50,000? There's nothing stopping it. Theoretically, Bitcoin is not going to bottom until December. Now, if you look on the charts, it's a little hard to make that notion because we obviously have a head and shoulders, and it looks like really on the 200-day moving average on the weekly chart, it really looks like we're holding. Now, if you go to the daily chart where we're looking at the 1 day, oh, forget about it. Forget about it. On Bitcoin on the daily, forget about it. We are below the 200-day moving average, but I really do like looking at the weekly average, especially if I want to look farther into the future here. And the thing about it is that there is nothing stopping Bitcoin from going down. If the market corrects, Bitcoin could go lower. Or maybe the opposite happens. What if the market pulls back? And what if that sends crypto to the upside? Ah, that's a good analogy too. So Ethereum, I have never owned Ethereum. I've never owned Bitcoin as well too. But with wrong stock here. Wrong asset, I should say. With Ethereum here. Hold on one second. What is going on? Okay, yep. So Ethereum. Ethereum is obviously very much more nasty than Bitcoin. Bitcoin is honestly holding on the weekly average. Ethereum is very much broken. But I'm seeing very much a double bottom. Very much a bottom from Liberation Day last year. And also very much somewhat a bottom here. This could be a double bottom. However, I was watching Ethereum pretty much around February, and I did talk about it a little bit. April, I also did talk about it too. And ever since it dipped down, I've just been very much watching it. So, call me a little crazy. I really feel Ethereum could very much go either direction. Ethereum very much could break this bottom from Liberation Day, which we would then go and test maybe 925. At that point, I would probably add one more Ethereum coin, asset, whatever you want to call it, crypto, and then that's pretty much about it. That's pretty much the most exposure that I really want to pretty much Ethereum. But understand that cryptocurrency, for so many people, it's a turnoff. For me, you gotta really get into crypto just like any other asset when nobody friggin' wants it. Okay? There's a time where crypto is gonna be looked at as being popular again, and then there's a time where crypto is not gonna be popular at all. And right now, the stock market in general is just not popular. So, I do want exposure to Ethereum. And for me, it's definitely going to be interesting. Now, just getting back to all-time highs, when will that maybe be for Ethereum? These things move very quickly. It could be maybe sometime next year. But theoretically, if I did get back to all-time highs, which, yes, I do believe Ethereum will be at all-time highs someday, just like Bitcoin is going to be at all-time highs someday. And if you're super duper bullish on Bitcoin for the future, it's going to be $250,000 someday. Yeah, it really will be someday. My losses and Adobe could very much be remade with just Ethereum. Very much. So I do want some level of risk being exposed to, because obviously I don't mind taking risk. I was actually thinking about buying long-term options on SoFi. And you want to know what? I have so much money invested in SoFi. I'd rather go into a different area, and I'd very much rather get some exposure to a new side of things. So that's really my philosophy around crypto. That's really my philosophy of what I've pretty much done in the last several hours here. If you have the same philosophy, I would love to hear from you all. If not, and you think I'm utterly a loony bin, definitely let me know too. Always enjoy hearing from those people. Otherwise, new video tomorrow, primarily on SoFi. Sorry again for this video being very long, but oh boy, it was definitely a lot to go over in today's episode. And like I said, I've done my due diligence around stocks. That is how I have made tremendous amount of life-changing money. And that's also how I have saved myself from enduring a lot of losses. You gotta know when to do your due diligence. And you also gotta know when, hey, things are not going like the way you thought. Is it because of geopolitics, or is it because of internal issues? So stay tuned for more videos. See you all tomorrow, and later.